and welcome to another edition of This and That Retirement Corner. Today we want to discuss two benefits. The first is company paid basic life, and the second is company paid family adjustment and family income.
Right, you spouses, please pay attention. You're likely and most often the recipient of these benefits, so let's take a look at them.
Okay, so let's start with the basic life company paid policy here. And we're going to focus on this first highlighted area, the 55 or older. Now keep in mind, we recognize that not everybody is an over the age of 55 retired annuitant. At the same vein, not everybody is a qualified or preferred spouse. So some of you may have a situation that doesn't fit exactly. This is just a general discussion to be available for understanding the difference between the two coverages. So if you note the 55 or older, the section over here says what percent of your annual monthly benefit pay. So if you finished and that annualized was 80,000, it shows you that you're going to get 150% of that, which in this case is 120,000. So that works all the way from 55 up to age 65. But after age 65, look, you start moving down all the way to 73 in 3 months, and so does the percentage you get. It starts dropping until you eventually get all the way down here at 50%, at which time that would be 40,000. So pretty big difference between the two policies, because this one is just a lump sum, quick shot. Depending on where you're at on the schedule, you can identify what you get. Now, alternatively, the family adjustment and family income, there's two parts to that, and it's a little different. But let me underscore one thing that's important. It's grandfathered. So we're seeing less and less of this over the years, and it sounds to reason that we'll probably see a little less in the future. But note, you have two coverages here. You've got the adjustment coverage and the income coverage. So when you're thinking about the adjustment coverage, it's a lump sum, just like the other one we just talked about. But it's a lump sum up to 1 year final annualized monthly benefit pay. So that's a little bit different. It does that same thing where after age 65, there's a reducing monthly benefit. So that's very similar, just a different lump sum amount. What's real different, in our opinion, is the income coverage. And as the name income implies, eligible beneficiaries receive monthly payments up to 20% of that monthly benefit annual pay, depending on who gets the benefit. So we understand there's so much more to this policy than just this, but a couple of the highlights that we like to review is that the payments, they're generally not paid during the first 5 years of retirement. In the same vein, if you're a preference spouse, that 20% monthly benefit pay for life, but note, or until remarriage, probably something important and worth noting. So moving forward, when you're thinking about this, keep in mind today was just the difference between the two benefits. Taxation, if applicable, on the premiums paid or the proceeds received is beyond the scope of today. And we also understand you have a contributory life elective policy that we're not touching. This is just the company paid information here and choices. So if you're looking for other resources, your personal benefits and compensation booklet has this information. You might be wondering exactly which coverage do you have you don't recall. If you want more detailed information than just the highlights we covered, go to this link or use a keyword search like ExxonMobil Life Insurance. Keep in mind that pre-retirement workshops from your company go through this information. And if you're already retired reviewing this and wondering what coverage you have and you don't want to call benefits right away, maybe you have a copy of that old retirement package and you'll find it listed there. So we hope that helps a little bit and just remind you of the difference between the two. Give us a call if you have any questions.